Hey everybody, so I wanted to talk a little bit about the volatility backdrop and a little bit about skew and how it plays into some of these names that we're seeing and some of these parabola type moves. Very unusual, right? So we're going to talk about things that you're not going to typically see in your average sort of options textbook. This is stuff that you kind of learn over time as a professional. You learn that things aren't always as they seem, and in a way, it's kind of almost like the laws of volatility physics can break down a little bit when certain things happen. And that's what we're going to talk about in a moment. So the SPY having a good little run here, pulling back to this very logical level right here. Just a reminder, everyone, of the disclaimer. So anything we talk about today is for educational, entertainment, and information purposes only. Do not do any of these trades without looking into this, doing some paper trading, and most certainly checking with a financial advisor. Kind of dipped its head under a couple times, but back in. So I'd say overall kind of looks good. And I'd say on the volatility side, which I think is interesting, we've stayed a little bit elevated. Nvidia came out. I kind of thought we'd head to about 15 and a half right away, but we stayed up due to, in all likelihood, geopolitical issues, right? The Ukraine situation, Russia, missiles being sent over there. We're not sure what the administration is doing. It seems kind of stupid, but it's gotten people a little bit nervous about what's happening there. Because as long as people have, a potential World War III, hopefully I'm exaggerating here, but let's say World War III in the backs of their minds, then it's going to keep things a little bit more on edge, right? But in the end, by the end of the week, we actually saw VIX come in here. So we saw this push up here. Nvidia's out. I always talked about how I thought that was kind of that last piece of the puzzle, FOMC, election, a few other data points. And then Nvidia was that last piece that was very important, not unbelievably important, as I explained in my last video, but very important. And so it came out as okay. And so by the end of the week, we had this little push down, which was interesting because the market sort of shrugged off maybe something potentially happening overseas on the weekend. But here we are, VIX back down to 1524. That's what I was calling for. In our community, I've been talking about owning some VIX puts, which are doing well already. We might spread those out if we get a little bit lower on the VIX, and it depends what the futures do, because remember, trading VIX options, you're not trading the VIX per se. It is related to the futures, but you're trading the futures first and foremost and trying to kind of generally predict where that VIX is going to be at expiration. So it's a little bit more nuanced. Do not trade it unless you understand a bit more like that. But this is some of the guidance I'm giving people in my community. This isn't your typical community where you're just kind of spoon feeding people a couple of cash secured puts. These, everyone's learning. I'm going to talk a little bit more about that. So S&P kind of recovering here. I think it looks okay. This is not trading advice, but I have some plays upside iron condor along some products that are short volatility, so SFIX, things like that. When do those products do well? Well, they do well when the volatility curves looks like this. So we're back into a very happy space, right? So if I had my little marker here, I could give you a happy. Here we go. Nice happy face on this. I hope that's happy enough for you, but it's definitely very, oh, that's a little sinister looking. But this is a happy picture here, guys. So we are going to be a little bit more positive, right? The glass is half full when you get a picture like this. This generally means that fear has started to really dissipate from markets, or really it's come out quite a bit. You might almost see something like this in a VIX 13, 14 environment, but we're still staying a little bit elevated with just some kind of a little fear just kind of sticking in there a little bit longer. But this is generally a very, very happy picture. So I like to see that. I like to see it in the face of S&P rallying. QQQ not as positive because we have the mags really not acting well, Microsoft not acting well. But this is a market that's broadening out. So very interesting. So let's get to the point of the video here, which is that we've got stocks going parabolic, right? And so how does volatility act? Well, typical behavior for volatility, let's take a look here. This is kind of how everyone thinks of it. And this is what you're going to see everywhere on the internet, is that you get low volatility environments as the market's going up. And when the market comes down a little bit, this is the S&P pulling back, what do you get? Well, you get the VIX going up. And then as markets calm down again, you get the VIX coming down, right? So this is our sort of inverse correlation. Markets go up, VIX comes down, and vice versa. Markets go down and VIX pops up. Generally speaking, let's say 83, 85% of the time that's going to happen. So But what does that mean? It means that, when things are calm and when stocks are going up, people are more sure of the future. There's less uncertainty that's crept into the mindset of investors, and that's a positive thing. But what happens when stocks go parabolic? Well, remember that upside volatility is still volatility, right? That is an absolute truth in the volatility space, is when you get very, very sharp rises. We saw a very sharp rise after the election, and volatility came down, but it really, in my opinion, kind of hung in there just a little bit, because that was a very, very big move to the upside. As long as things are going up very strongly, right? It tends to be very, very strong moves that get this reaction. Then you're going to get a little bit of caution in the volatility space, because the market is worried. And sometimes what you need is for markets to kind of pull back a little bit for you to get that drop in volatility. It's not intuitive to think that way, but sometimes after parabolic moves, you need a little pullback, and then the market breathes that sigh of relief and says, oh man, thank goodness we're not continuing to go parabolic, and we can relax a little bit and start to price in what is considered more normal movement. When stocks are going parabolic, that's abnormal movement over time. We would consider that abnormal movement. And when there's abnormal movement, whether it's up or down, volatility markets are going to reflect that heightened sense of caution, right? So remember, it can happen both ways. And so I had a student this week, actually a member of our community, and he said, very, very smart member who's doing some phenomenal trades, really, really into the whole coin complex, and a believer and doing some great trades. But at one point he said, I'm short these puts on MSTU, which is 2 times leveraged upside MSTR, which is just insane mode, right? Ludicrous mode. You've got, that's kind of like steroids on steroids, etc. You're really starting to play with some movement here. So he had short puts, right, expecting a move up in the stock, and he got the move up in the stock, and his puts didn't really go anywhere, right? Initially they did go down, and then everything came in. And I said, listen, my friend, welcome to the world of insane volatility and parabolic moves. Look what happened to volatility on MSTU. It went from around, let's say 250 all the way up to, say, 320. So, this is the curve here. So the out of the money puts actually pushed up even more. And I said, well, that's also what happened. You had skew pushing up a little bit as well. You had volatility getting pushed up. You had skew getting pushed up. And that's what's troubling your puts. They are not going to come down that much when things are like this. And you can, there's an old story about the crash of 87. Stocks got crushed. We know that the VIX, the pre-VIX measurement went to 150. And everyone's like, well, what the heck happened to my short calls? My short calls aren't really going down. Well, welcome to the world of volatility exploding. That's Vega exposure. Volatility going bananas to the upside is going to affect your short call positions. And that's what happened here. It was like, okay, great, that makes sense. And so let's take a look at some parabolas. Well, Bitcoin basically has been a parabola, and certainly the proxies that have to do with Bitcoin have gone parabolic as well. We've seen, let's take a look at Coinbase, which has actually calmed down a little bit lately. We can see that it's sort of sitting around here. I think this is an interesting one, but we've had basically a smaller parabola here. It's not as levered to the price of Bitcoin in a sense as MSTR, which is in this sort of world of its own. I don't know what the heck it really is. It smells a bit Ponzi-ish to me, but okay, they sell stock and bonds, and they make money, and they buy more Bitcoin, and they rinse and repeat over and over again for this fortuitous cycle of basically continuing to buy Bitcoin, which makes the stock go up, and they sell more, and then they keep buying Bitcoin. Yeah, that makes sense. That's going to keep working, I guess, until it doesn't. So, but in the meantime, we can have a lot of fun playing things like this. We made 100% on a trade in one day in the community this week on MSTR. It was fantastic. Limited risk. I didn't lose a drop of sweat waiting for it to play out, and sure enough, it did play out, because when you get this kind of movement, there's opportunity all over the place, and you just have to grab it and understand options. It was a really cool structure that I threw out there. One member made something like 51 times his monthly membership in one trade. So, happy days for things like that. So let's take a look at some of the skew measures. Here's your coin skew. So anything above this zero line is going to be puts being more expensive than calls, right, on a 30-day basis. we're looking at 25 delta versus 25 delta, which is, consider that as it isn't a fixed percentage out of the money. It's going to vary depending on the product and the volatility of that product. But just consider it a reasonable amount outside of the money calls versus a reasonable amount of out of the money puts. And they measure that, and above the zero line, we have puts being more expensive. So typical for coin is calls being more expensive. And that's, it's a little bit more more in the category of like a gold where, generally the explosive moves come to the upside, maybe not as much to the downside. So people tend to pay more for that upside call skew. And here you can see huge call buying in there. And then it really was kind of flat into the election, which was very interesting. They were not pricing the result and the ensuing jump up in Bitcoin. And so what happened was the skew blew out after that move. And what that means, blew out, means suddenly everybody's got FOMO, they're buying calls, they're jamming up the price of calls. And that is almost an exhaustion move. So this is interesting right now. I mean, this is never super easy to kind of interpret. Sometimes that kind of move means we're setting up for another move higher. Sometimes it means exhaustion. Depends on the situation. Here, I think it's a bit of exhaustion, but we got a little bit of positive news on Friday out of, in the fixed income MSTR space out of Allianz. And so I think that bolsters this sector maybe a little bit, but it's going to be dependent on Bitcoin. So we're going to have to see, do we pin around that 100,000 level, or do we pull back a little bit or continue on? We don't know exactly. My hunch is that we kind of stick around 100,000 just for a little bit. But look at that skew. So let's take a look at MSTR skew. Here's another parabolic move. Here we go. Boom. Well, what happens with parabolas? Well, you get this, right? You get typical volatility around 100. Now we're 225, right? So volatility can rise into a rise. That's the point of this video. Are the laws of volatility physics breaking down? Are the laws of options volatility trading breaking down here? Well, no. When a move is strong enough to the upside, you're going to get volatility increasing because that's still movement. That's still volatility. We tend to think of volatility as downside risk, downside movement. But volatility is really both ways in a sense. So market makers getting run over, they need to bid up that volatility because they're selling a whole bunch of contracts, they're selling upside calls, and they have to raise their offerings, raise their offers. There's just no other way if they want to stay, keep out of trouble. And so another one, is it only in the Bitcoin space? Well, let's look at another name, Reddit, which I've loved. We got into it in the community at 114, which I was telling everybody to do, and it's now hit 150 on Thursday. It hit 155, I think, or 157, just in about a week. So unbelievable. Look at the volatility skew here. Suddenly, people are jamming up calls as well. Look at this. Suddenly Reddit starts really breaking out harder than was already breaking out, and people are starting to buy that upside in calls. That's pushing up that upside skew, right? Typical for S&P rising is people start to hammer that upside call skew because they're selling covered calls, they're trying to raise money, they're trying to monetize, let's say, a move up in the market, trying to grab a little piece of the action there in options market, in the sentiment markets, and they jam it down. But right now we're seeing a whole bunch of parabolas everywhere. Let's look at, this isn't even a parabola, but let's take a look at Palo Alto. They didn't love the earnings, but it bounced back pretty strongly, and it typically trades, in a typical fashion, I'd say, which is kind of puts a little bit more expensive. But it can be sort of flat, and look what's happened. Now it's starting to act well again, and the skew has flattened out again. So basically, they've sort of, pushed up upside calls a little bit more steeply than they typically are, and that's kind of keeping that upside a little bit more expensive. Now they're about even right now, but versus what is typical over the last 4 or 5 months has now, which was puts being more expensive, now has turned into being very, very balanced. So sometimes the move doesn't have to be extreme on the skew or volatility side, but it's a sign that people are worried. There's FOMO out there. There's FOMO. Speaking of FOMO, let's take a look at Snow. Look at this. Snow had an unbelievable move on earnings, and look what the volatility did. The calls are more expensive now out 30 days, right? So typically it's going to be puts a little bit more expensive back here, not so much back in March. But look at this. Now they're piling into upside versus downside. Sometimes the skew can mean that the puts are coming down, the calls are going up, or maybe the puts are staying still and the calls are going up. So there's different permutations of why these numbers come out. But generally speaking, we can say that calls versus puts are now being more favored. And that's what happens in parabolic moves. There's crazy, crazy stuff happening. So make no mistake, guys, volatility cannot act in your typical fashion at times because those upside moves can be very, very strong. And that can be confusing to people. And that's one of the great things about being in our community. I explain things, I tell people, I give them insight that they are not going to hear anywhere else. They're not going to read in any books unless they look awfully, awfully hard. Certainly not in your typical, here's how to trade the wheel book. Like, you're not going to read anything like that in there. So this is where you learn to be a real option trader. This is not your spoon-fed, I'm going to tell you what to do and I don't care what you think. No, I'm teaching people, I'm guiding people. And right now we've got this incredible Black Friday sale. Check it out in the description. Just opened up today. My best deal ever. You get everything with this. And it's an incredible, incredible way to up your game and become the option trader that you always wanted to be. I'm not guaranteeing you can make 100% on a trade like I just did on MSTR, or you're going to make $20,000 on one contract as we have over the last month. On a single contract per trade, we've booked $20,000 in profits. Am I going to guarantee that we're going to do that going forward? Absolutely not. But what I can tell you is that you are going to learn to do this. And as students are telling me, it's boosting their confidence. And doing well in investing, and especially trading, is about boosting your confidence and starting to realize where the edge is. And it's all about edge, all about edge. And so I hope that you check it out. We've got an incredible community. It comes with free courses. It comes with chart packages every day. You're going to get like 50, 60, 70 charts every day with indicators to help you get going. It's got quick start guides. It's got lists of stocks that are acting well, that are acting neutral, that are acting poorly, so you can start to use those to apply options to. It's got incredible pro-level research, and then of course many, many great traders in there that are doing great things, throwing out trades. And that is what it's all about, right? It's about support. It's about not just getting good at one thing, selling a cash secured put. No, this is about a supportive ecosystem that is designed to surround you and envelop you in all the tools that you need to be better at this. Magic bullet? Sorry, haven't got one for you. Can I tell you, you're going to get better and more knowledgeable and better equipped to do this properly, because 90% of traders don't succeed. Do you want to be in that 10%? Do you want to be in that top 5% that actually make a whole bunch of money? Well, you've got to take certain steps to do that. So check it out, check out the program, and I hope to see you on the inside. DM me, comment on this if you'd like to. I can answer questions here as well. There are a lot of ways to get in touch with me or my team. Natasha is happy to help you out with any questions as well. So we're here for you, and we'll see you guys in the next video. Bye-bye.